Welcome to the Daily Brief. This is being prepared Thursday, August 11th, where I'll briefly go over the main points of what happened in the market on Thursday, and then we'll see how things shape up to look for Friday, August 12th. So let's go back and talk about what happened right at the open. We had a gap higher, just like we had on Wednesday. We saw another gap higher right at the open on Thursday. We ended up going above R1 at 42.22, and we even went above R2 at 42.33. We never made it up to R3, unlike in Wednesday's session when we got all the way to R4. That rarely happens. And because of the wide range in Wednesday's session, we weren't in danger of really hitting that because that range was so wide that the pivot points for Thursday's session were also very wide. And unfortunately, that's when the daily high was set at right around 42.58. We went a little bit near there. I like to use round numbers when I'm doing this. I don't go with the decimals at the end. And then as the day went on, prices then started to fall. They retreated down below R2, then they went down below R1, then they went below the unchanged level. So that means we went negative, and we went down to the daily pivot, which was right below or not too far below the unchanged level. Going into the close, we ended up closing at the low. So it was not really a positive day from that aspect. But we ended up only being down 0.07%, just another very small close to close decline. Volume continues to be below average. The technicals, they're still hanging in there. We're still positive overall. Unfortunately, because these down days are not very strong on a closing basis, we're not working off that short-term overbought situation that we've been dealing with the last few days. It's not really wearing off all that much. It is a little bit, but there are some other indicators that are still pegged pretty positive. And I hate to say that we want to go higher, and so a decline would be good, but that might help things a little bit if you view it that way. But just because we become overbought doesn't mean that we have to turn around and go. We just want to be ready for things to maybe pull back in the opposite direction. But a market can be overextended to the upside or downside for a long time. And that's kind of what we're seeing right now. Inflation and interest rates are still the real focus. We had the PPI that was released in right before Thursday's session. We have a whole list of geopolitical concerns. Earnings are coming out, and then the different debates going back about, are we in a recession or are we not? So let's make some comments here. The PPI came out and it was lower than expected, and it actually declined. So we saw that with the CPI on Wednesday. Now we saw that with the PPI on Thursday. So that's showing that this scenario that perhaps not too far into the future, the Fed may have inflation under control. They can stop this hawkish stance, and then they can pivot more to a dove stance where now they turn back over to the economy and try to get that going. But their priority right now is still to fight inflation. In the session, growth really lagged. Even when we were up strong, I was watching the growth sector versus the value sector, and growth was quite a bit behind, and it ended up having more of a decline than the value sector. So it hasn't changed our scenarios, but it really didn't help much in Thursday's session. But the small caps and the mid caps, they did better. They actually outperformed the large caps, and that can give some support to the market. The sector rotation and our positive setups, they did show some declines, but they're still positive. We're still looking okay with our setups, with our sector rotation. We're still above the moving average, and the moving average is going up. So that's still looking positive, even though it declined a bit. The 10 to the 2 and the 10 to the 5 yield curves, they're still inverted. Fear is still right around 50. I think it's at 52 right now. So that's more neutral territory. And we're trying to work off some of these short-term overbought indicators. Some of them are working off. Others are just kind of sitting there in extreme positive territory. The report that came out showed that the PPI was down 0.5%. They expected it to be up 0.3%. So that was taken as good news as far as inflation. The core PPI, which you take out the food and energy, it rose 0.2, where they had expected it to rise up 0.4. So it was weaker than expected in that regard. Also, the jobless claims came in just about 1,000 less than what was expected. It came in at 262,000. They expected it to be at 263,000. Now, this is higher than in what it has been, even though this report is a little bit lower, but we're starting to see that 4-week moving average move up slightly. We want to really watch the employment situation. Our trend is still positive. I'm keeping the bias as positive because we had a pretty strong up day, even though we closed lower. But at the same time, you could take that more as a negative to really shoot up at the open, give all of that back and actually close down slightly. That might be seen as a little bit more negative. So you may choose to look at it in a different light than what I have here. I'm still keeping the momentum as positive because things are still looking okay. When we have up days, they tend to be strong. When we have down days, they tend to not be down all that much. All right, so then what's our outlook for Friday? The technicals continue to be positive, but we have a little bit of concern, like the slope oscillator has switched over negative now. And some of our indicators are showing a little bit of weakness, but they're still pretty much positive overall. Sentiment remains neutral. The reports that are coming out on Friday are consumer sentiment. That's kind of the biggie. How are people feeling about things? And then the whole list of geopolitical events that we go over all the time, with the main one being inflation and interest rates. We're still really in that realm. But as I always say, any one of these other issues that are listed here could come to the forefront and become the fixation for the market, at least on a short-term basis. So what are our scenarios? We're not really looking at a down scenario right now because even though we have a lot of these headwinds, that could, again, if some of these things shift, that could send us lower. And the fact that we're continue to be a little bit short-term overbought, that might not help. But the technicals are pretty much positive. So we can't really default to a negative scenario right now. We're still in an up scenario because of the technicals. And again, a lot of people are really having trouble believing, can the markets even go up? And if they do start to go up, there might be this fear of missing out or FOMO. And so they might jump into the market. Our scenarios are still holding up, even though they took a bit of a hit in Thursday's session. Our positive setups, they're still looking okay, although not quite as strong as before, where a couple of them actually have improved. And then our technicals, because they're positive, because we're getting back above some moving averages, we're dealing more with the 200 period moving averages now. We want to keep an eye on some of these pivot points. Some of them can act as resistance, as well as the fib retracements, and some of them can act as support or other highs and lows that we may run across. We're not in a sideways or neutral trend right now because the ADX, it's still going up. It's above 20. The green line's on top. So that means we default to the positive trend. So our conclusion then, we still say overall the S&P is positive. Short term, it's positive. Still a little bit of the short term thing going on there with the overbought. Intermediate term is positive, where long term it remains negative. So thank you. I hope you're finding these daily briefs to be helpful. I will prepare and post the full-blown daily video update. And if you feel that's necessary, you can go ahead and tune into that to get a more in-depth analysis of what's happening.